Welcome to the Willow Oak Asset Management 2018 Investment Idea of the Year, which is Belmond Securities. That idea was submitted by none other than Thomas Braziel, Managing Partner at BE Capital and High Five Capital. Hello, Mr. Braziel. Thank you for joining us. A quick disclaimer here for Willow Oak Asset Management, so you can read that at your leisure. Thank you. What is Willow Oak Asset Management? Good question. So Willow Oak Asset Management is a value-oriented asset management company founded in 2016. It's a wholly owned subsidiary of Enterprise Diversified. The ticker is SYTE. My name is Rodney Lake. I'm the president for the asset management business. I also serve as the chief operating officer for the company, parent company. We also have Jessica Greer, who's the vice president for the asset management business. Some products and services as examples, fund management services, FMS for short here. These are some services not provided by a traditional third party. For example, investor relations, back office, third party interface, marketing events, all from one group. The asset management business has also seeded a fund, an example, Alluvial Fund. We also launched a fund from full-on startup, which was Bonhoeffer Capital Management. And of course, the Willow Oak Select Fund, and that's why we're here today to talk about the best idea from 2018 for the Willow Oak Select Fund. We also have an advisory committee, which we value greatly. Just a bit more on the structure for Willow Oak Asset Management. Enterprise Diversified, again, SYTE, the ticker, publicly traded company in the US, is the parent company. Willow Oak Asset Management is the subsidiary, and Willow Oak Select Fund is the fund within the business. What is the Select Fund? Just a little bit about that now. It's a curated best ideas fund. We have 7 contributing managers, including Mr. Braziel, thank you, which we're very proud of. These ideas are then vetted by our team here, so principally me and Mr. Bridge, the portfolio advisor for the fund. We use a framework, business, management, price valuation, and balance sheet, the BMPB, for short, and we stole that directly from Mr. Buffett, who's been fairly successful at this investment game. So we use that framework to vet all of our ideas and also to serve as a checklist for us so we don't miss things. We launched on August 1st, 2018, which was an exciting time to launch if you've been keeping track of the markets at home. We have me as the portfolio manager. My background includes endowment management. I'm a professor at the George Washington University and run the GW Investment Institute. And again, managers circulate ideas to us. We work with them to understand those ideas and vet those ideas, and they then become part of the portfolio after our review if we so decide. So now I'd like to introduce Mr. Thomas Braziel, which again, we're very proud of that he is associated with us, and we're a friend certainly of the business and a partner in this endeavor. Thank you, Mr. Braziel. He is the founder of High Five Capital, which is a value-oriented hedge fund focused on special situations and distressed investment opportunities globally. Previously, Mr. Braziel co-managed BE Capital for 7 years. He's also involved in a variety of other things, including being the co-chairman of Winland Electronics, OTC listed company, ticker WELX, and he's the chairman of the Unsecured Creditors Committee for another OTC company, PRXIQ, and the Delaware appointed receiver of Fund.com OTC company, FNDM. He's also, his alma maters include Columbia and NYU, so we certainly respect his educational credentials. Those are great schools, and we're very, again, proud to have him as a partner here.
I'm going to get GW on there. Go ahead.
Exactly. We can add you to the alumni of GW here, hopefully soon. All right, so we're going to dive into this idea, and I'm going to turn it over to you, Mr. Braziel. Again, thank you for doing this, but Belmond is a luxury hotel company. The ticker is BEL, and now over to you, Mr. Braziel, to hear more about the company.
Sure. So thanks for including me in Select Fund. It's great to be a part of it. I mean, we were sort of friends before the Select Fund was envisioned and launched, and I'm excited to be a part of it. I think it's a very cool thing, and continued, good luck and with the fund. So yeah, so I submitted Belmond. Belmond was basically a value deeply undervalued company for a number of years. Let's call it a value trap. Basically, it was a small luxury hotel brand. It used to be called the Orient Express Group. And as you see in the corner there, the gentleman wrote a biography or autobiography about his experience of building the group. Really marquee assets. And so the story was marquee assets, a lot of value. Managers owned it for years, but there was always sort of a lockbox, which is, even though it wasn't a melting ice cube, it was always underwriting the properties, and it was sort of a subscale operator, but fantastic properties. And you knew that when the business was finally sold, that the value would basically be unlocked. The issue was timing. So what caught our attention, and you go to the next slide, was late last year, or mid to late last year, an 8K was filed where basically the founder, the same gentleman that wrote that autobiography, James Sherwood, basically sold back his first right of refusal on their marquee asset, which is the Hotel Cipriani in Venice. Anybody that made money on this trade, I suggest you check out the Hotel Cipriani. It's a fantastic hotel. I'm sure. I've never been, but I'm sure it's amazing. I've been to some of the other properties, so I can vouch for their quality. So long story short is, he sold back first right of refusal. It included $10 million upfront and $25 million kicker if it was sold within a year. And so our math was, this business is definitely being sold within the year. Partly because a lot of the board was basically made up of friends, and the chairman is a former personal lawyer of the founder, so that's always helpful. And also, like, it was time. I mean, this business, the CEO had been brought in a few years ago. He was a Starwood alum. He had successfully sold Rosewood Hotels, and it was really Roland Voss 2.0. And so we really thought it was a good idea. We started buying at 12 when the 8K came out. Strategic Alternatives was announced. Stock moved to 17. We still thought the company was very cheap at 17. We thought a transaction was very likely to go off in the 20 with a 2 in front of it. And we submitted the idea to Rodney and Mike, who, they can take it. They can tell me what they thought of the idea, but we submitted the idea, and I'm glad to hear that you guys liked it and bought. So.
Yeah, so thank you, Mr. Braziel, for that quick rundown on Belmond. Certainly we could talk at length about the company. But yeah, Thomas submitted this idea to us. We quickly ran it through our framework, business management balance sheet valuation here. And it was, clearly a special situation. And so obviously some particulars applied to these special situations. But quickly running through the framework, Mr. Bridge and I agreed with the thesis that Mr. Braziel put forward pretty quickly. Again, this was, I think, a straightforward idea where it looked like we had an asymmetric payoff, meaning our upside looked far greater than our downside in this situation, especially given that 8K that Mr. Braziel mentioned. And we also used the Charlie Munger piece here, where people will work to their incentives, and there was a big incentive for this deal to get done. And certainly, as you mentioned before, that in the past there was no real catalyst, to drive value in this, and that announcement essentially put that catalyst in place and clarified for people, okay, these are the incentives, and we think these people managing the company in particular are going to work to those incentives. And so we, again, put it in the portfolio. Also, it has a strong asset base, which we thought, that was a nice downside, with the hope that somebody would overpay. Ultimately, as mentioned, LVMH came in and paid $25 for it. Very strong company, so we were not really worried about the deal closing after the announcement, and certainly we were hoping for a more competitive environment. Any additional color on the announcement, Mr. Braziel?
Yeah, so I think it was a robust sales process, but I think, potentially part of the story was, you could call it poor corporate governance. Let's just call it not great corporate governance. Let's not go negative. Let's just say not great corporate governance. And part of that led to potentially LVMH over some other suitors, like, people that buy, probably the premier buyer of high-end hotels is the Qatari Sovereign Wealth Fund. They bought Claridge's here in London. They bought properties in New York, marquee property. They only like creme de la creme properties. So they were probably the leading sort of going into this auction buyer. We don't know what happened to them in the end, but LVMH at 25 is nothing to sneeze at. I think on a RevPAR basis, a very, very healthy multiple. But just to put some context, this group had an unsolicited offer at 60 pre pre-2007-8 crisis. And so there was potential to go even higher, but 25 is very healthy, and won't sneeze at 25. And LVMH is a great buyer, so it's all cash, and it's there's no. I don't think anyone's worried about the deal closing. So as you can probably see by the deal spread. So yeah, just to echo you, Rodney, I totally agree. Incentives are everything, and if you can match valuation with catalysts and incentives, those are great places to find yourself. So.
Thank you, Mr. Braziel. And so now, again, thank you for submitting the best idea of 2018. Now we're just curious what thoughts you might have for 2019 looking forward here.
I look forward to submitting a lot more great ideas. So yeah, in terms of stuff we're currently looking at, and like I mentioned, Colony Capital. It's a story. It's basically a company sort of falling out of bed and really did a bad transaction with North Star, but trying to pick up the pieces. So company trades for about about $5-6. There's an activist involved now. Anybody that saw the Baupost letter, it might have been picked up in the press. Baupost owns some at like double digits. So, we like Baupost at 10 and we're getting it for 5. And that's Steph Klarman, Baupost. But as well, we think that there's a lot of asset value, and we think, the activists, this just came out basically the day before yesterday, that they're setting up a strategic asset review committee. So again, there's value. There's a founder that just came back. He basically fired the CEO and came back into the seat. So he has a lot of personal wealth at risk, and he has a lot to prove, because I think people sort of thought, wow, it's Tom Barrack, who's the founder and CEO. There's a lot to prove to show that he still got it, and he can still wheel and deal with the big boys and the sort of private equity real estate world. And we think that the price is right. So price is right, incentives are right, and that's always a good trend, a good situation. So we like it. We're long.
Thank you, Mr. Braziel. Thanks for sharing that idea. And again, this is the 2018 Best Ideas, which was Belmond. And maybe just a bit more about Willow Oak to finish here. We started the idea here in July. It was first conceived in March, and so it got going pretty quickly. So we're very proud of the pace that we launched this, and certainly having an idea work out in December is great news in the same calendar year. So better lucky than good in that case. But in this case, if you align yourselves with smart people, the good helps, like Mr. Braziel. So I want to say a big thank you to Mr. Braziel, and we look forward to 2019 and partnering further. Thank you, Mr. Braziel.
Thank you, Rodney. Excited to continue to be a part of it. Thanks, guys.
Thank you. And that's the close of the 2018 Best Ideas for the Willow Oak Select Fund. Thank you.